Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Well, the U.S. key markets themselves, the S&P and the NASDAQ, are holding above critical breakpoints, although the TSX remains steadfastly below its key breakpoint. While it shows little signs of reversing, the TSX is not very far away from being able to break out if conditions permit. I should further observe that in the S&P 500 index for the year to date, it has really been the top 20 stocks, heavily dominated by the FANGs, that have accounted for most of the index advance. In other words, 480 of the stocks have collectively more or less gone nowhere since the beginning of January. So it's been a very narrow market, to say the least. Sometimes, maybe we miss enjoying the forest for looking at the trees. And an overly picky approach to the FANGs may be somewhat of an error in approach. As I will show you today, all 8 of the FANGs show clear advances year to date. So just being in this group of stocks, indeed being in any of the FANGs, has been a win for investors. Of some concern, however, is that the collective net income of what I might call the big 5, that is Apple, Amazon, Meta, Alphabet, and Microsoft, over the past 4 quarters, the net collective dividend has fallen by 9% compared to the year before. I just want to note that, because if things turn nasty in the overall market, which they have not so far, and I don't see sign of it as of yet, but if things turn nasty, the visible fundamentals, will leave something to be desired. As well, their current earnings multiple is sitting well above their long-term average. I suspect that it will be the NASDAQ 100 itself which provides any final flag for the group, but I don't have anything hostile like that as of yet. Anyway, let's see what the FANG stocks did this year. But before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel. Okay, let's start off with Amazon and look at the beginning of the year. The stock started off at about $85, and finished at $137. That's a nice gain there. Indeed. And Alphabet started off just about $100, finished at $136. That's a gain of 36%. NVIDIA's had quite a year, It started off, look at that, at about $220, and it's currently trading at $462. That is a gain of 122%, and it remains comfortably ensconced in that channel between its HB6 and its HB7. That's price to book of 33 to 44 times book. Netflix, let's see where we started off the year. Netflix started off the year at about $340, finished at $443. Well, that's a gain of 24%. And a little bit of backing and forthing here, but it remains above its bubble price for the time being. Tesla, Tesla, look at Tesla's been all over the map, hasn't it? But it started off at just about $200, finished at $251. Well, that's a gain of 25%. Apple started off, look at that, at about 143, finished at 177. That's a gain of 22%. Now, very recently, Apple is showing signs of breaking below its HB6 price, which is 33 times book value. So we'll see what happens here. Meta started off, that just had a beautiful run, hasn't it? Started off at just under $200, finished at 298 for, actually, sorry, again, it's opened at 183. Sorry, and is currently trading at 298. That's a gain of 60%. Now, very recently, the stock has been having trouble holding its mid-super growth price. That's 5.5 times book. So we've got ourselves a little bit of a warning. Finally, Microsoft, which recently has sort of gone nowhere, but look, that stock started off at, let me see, about $240. It's currently $329. That's a gain of 40%. So even though lately the stock has been unable to break above its HB2, nonetheless, the stock has had a good year so far. Now to summarize, on average, the FANGs that we track on FANG Friday have risen by an average of 45% this year, although heavily skewed by NVIDIA. Otherwise, it would be 35. Still, pretty nice on a straight buy and hold basis. In the longer run, it has certainly been very easy to beat the performance of the FANGs by trading the breakpoint signals, and we have done so over the past 4 years. But this year, trading among the FANG values has not really yielded much of an advantage, I think, as you can see. On closer inspection, however, some discrimination is possible. Amazon and Alphabet and NVIDIA are holding in above key breakpoints. And I have to note that both Amazon and Alphabet have to hold here at their respective breakpoints, and they are close at hand. I should therefore add, please note those breakpoint prices and keep them in mind. NVIDIA gave us a tiny hiccup at its HB6 price, that's 33 times book, its previous extreme high ever, but only for a moment, and it's been up and away, sort of, ever since. Do take a look at the slope of the breakpoint channel for the stock. That 30% slope means that as long as the shares can remain within that channel, investors are winning. I cannot help but observe, however, that more and more chip makers are aggressively trying to push into NVIDIA's space, and the huge profit margins of 70% plus that the company has recently enjoyed may be short-lived. All I'm saying is, if you own the stock, keep your eyes on the breakpoint values, particularly the lower boundary, the HB6, or 33 times book. Both Tesla and Apple have set back one breakpoint, and both have rallied. Apple has, however, apparently broken below its HB6 price, that 33 times book, and I suspect lower prices ahead. Apple declined on reports that China plans to expand a ban on iPhone use to its state-backed agencies and companies. And more bad news from the States. The firm received a warning from U.S. regulators about being overly restrictive in access to its payments apps, a shot at its tap-to-pay technology. It's also worth noting that Apple's sales have slowed to minuscule levels, and any positive growth now is supported largely by growth in its services. As Fred Hickey of the High Tech Strategist notably observed, High-tech companies that now rely on services are coming to the end of their growth era. It's still the largest company by market cap in the world, but its supporting values are very weak, with only stock market buybacks really supporting the shares these days. I suspect that lower prices and valuations lie ahead, despite, I have to note, almost frantic sounding buy recommendations by holders of its stock. I'll ask again, is Tesla an auto company or an AI company? The past 2 weeks, it's been an AI company. Netflix did give us a preliminary sell signals, which has since been rescinded. So far, so good. But personally, as I said last week, I do not like warning shots being fired across my bow. Meta has very recently given us a confirmed sell signal by failing to hold at its MSG price, which is 5.5 times book. I'm disappointed that the shares have not reached my bubble price target. But I don't try to argue with the market, so I'll have to take it as read. That leaves me with Microsoft, with its management sounding the caution horn. A retreat to its HB1 price seems in order. Now, this leaves me with providing you with some parting words about the NASDAQ 100 and the S&P 500. The S&P 500 hit support virtually dead on 2 weeks ago, but the NASDAQ 100 is hanging in comfortably above its bubble price. That's 7.4 times book. So far, so good. And what some are hoping is a new bull market is still intact. But, as Robbie Burns might say, a me doubts. But then again, I have never won an argument with the market itself. Finally, remember what Jerome Powell said at Jackson's Hole, that the U.S. Federal Reserve Board is navigating by the stars under cloudy skies. Just don't get too complacent yourself. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you